Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Friday, May the 28th, 2010, and we're just about to start a 3-day weekend. But before we do, I thought today would be a good day to go over a couple of details that I think bulls might have forgotten. So let's look at that real quick, okay? Now, as you guys know, I'm a bear right now. I can't help myself. It's just the reality of the situation, in my opinion. And I've shown you guys why I don't think this little bounce is going to hold. If you want to see that again, go back and watch yesterday's market analysis video, or you can watch the video from May 18th where I show you this chart looks an awful lot like the uh, 1930s credit crash that ended up being a Great Depression. But people say that I'm overly bearish, and there's more than a few reasons to be bullish. So I thought, you know what, today let's go ahead and look at those reasons from a fair perspective, okay? Let's really analyze it and see if we can't find a reason to be a bull, all right? So let's do that. This is the NASDAQ chart. I'm showing this chart today because it's the easiest to see these issues. Um, right here we have some reasons that bulls might be going long, all right? Right here, okay, you got this oversold condition, short-term oversold condition by the slow stotch. It's not a reason to buy all by itself. You go back and look at 2008, it's down here at the 20 line all the time, and it was not a time to buy. But let's just pretend for a moment that this is just like this, okay? So there's that. Let's see what else we can find here. If we scroll on down, we can find, yes, there we are. Let's grab the right tools. All right. The MACD histogram right here starting to trend up a little bit right there, okay? Of course, there's no volume behind the buying activity, compared to the selling, but we still got that, okay? Let's see what else we can find. There we go. The number one item here. See this low point right here? Yeah, it's a little bit lower than this point here, so it's technically a little uptrend right there, okay? That's a good reason to go buy. All right, now I'd like to show you these conditions on the long-term chart as well, but they're not there. Um, Basically, it doesn't confirm the short-term trend. What we have here, in my opinion, is a technical bounce. It's just going to get a little bounce. But like I pointed out yesterday, this gap down here, it's got to fill, just like this one had to back here. So, it pulls me back into my bearish position. But this may not be all fair to the bulls. Maybe there's something that I don't know. So I'll tell you what I do know, and then maybe you could comment back to this video on what you know that actually makes it a good, buy opportunity. So here's what I know. I know that current unemployment is at 9.9% ticking higher. I know that true unemployment is closer to 20%. I know that GDP growth rate has been revised lower from 3.2% to 3%, and that's with government stimulus working to boost the figures. I know that GDP growth is expected to be weaker in the second half of the year. I know that consumer spending was revised lower. No big shock there, as 20% of Americans are currently unemployed. That's 1 in 5. I know that business spending was also revised lower. I know that current Fed interest rate is near zero with nowhere to go but higher, and higher interest rates will hurt consumers, which will hurt businesses, the economic recovery, the end result being a lower GDP growth rate. I know about Greece. I know about Spain. I know about Portugal. I know about Italy. I know about Ireland. I know about the European Union debt held by U.S. banks. I know about the solvency of the euro in question. I know about the austerity measures which must be put in place to resolve the debt crisis, which will stifle the economic recovery in Europe, the world, and the GDP in the U.S. I know about Asia's inflation signals, which will force a rise in interest rates. This too will stifle the economic recovery of the globe. I know about the potential war between North and South Korea, as well as the current war on terror, which is at a high cost to the U.S. I know about the multi-billion-dollar losses suffered quarterly by the government-run Fannie Mae and Freddie Mac. I know about the substantial spike in mortgage delinquencies in the U.S. I know about the rolling over of real estate prices, suggesting no bottom in real estate has yet been found. Let's see, what else do I know? Well, I know the pending commercial real estate collapse will further put pressure on the real estate market, sink more banks, and drive unemployment even higher, all of which is bad for the economic recovery and GDP growth moving forward. I know that the more than 70 banks have already failed this year, and that's more than twice the amount which failed last year at this time. I know the long-term technical picture as seen on the U.S. market charts show an overall downtrend, the likes of which have not been seen since the Great Depression of the 1930s. I know about the flash crash of May 6th, suggesting all the above data has shifted smart money to start selling stocks rather than driving them higher. I know higher taxes in America only just start to spring up and will further hinder the economic recovery as the U.S. is 70% driven by consumer spending. I know about the financial reform of Wall Street and how this leaves a path of uncertainty for all investors. I know about the realistic cost of the new healthcare reform bill. I know about the current 90% debt to GDP ratio in the U.S., and I know how it will force higher taxes as well as other austerity measures on American citizens. I know about the highlighted downgrade of the U.S. debt rating by Moody's. And if I could ignore all of that, every single bit of that, and we look at the big picture, then I know that the current situation looks an awful lot like the 1929 crash. Here we have 1929, here we have the bounce of 1930, here we have the peak of 1930 in April, here we have the rolling over of the market just like it did in 1930s, and the problem with 1930s was the European uh, debt crisis. At that time it was Germany defaulted on their debt, and this looks an awful lot like that did. And we'll look right quick at that chart. Here we have the crash of 1929, the bounce and rebound that everybody thought was over. At this time, this was just a recession. And then we have the peak in April and brought on the slide by the default of debt in Europe and brought us into the Great Depression. But if we can forget all of that and just focus on the here and now, I think we could conclude that even with all of that forgotten, we still have no reason to go higher in this market. Why? Well, quite simply, there is less available credit to both businesses and consumers. The current market rally, which started in March of 2009, has already priced in a total economic recovery, which, based on the above data, is not likely to be sustainable. Plain and simple. So that's my bearish thesis. And if you've got a better one or a reason to be a bull, by all means, please post a comment to this video. I'd love to hear it. Because if you don't have a good reason for going long, you're just being dumb money. All right? Smart money has a reason to put their money where they do. Okay? And in our opinion, the odds are stacked in our favor for being a bear. God bless. Enjoy your weekend. Let's have a quick look at our disclaimer. Also, if you haven't been to our website at perfectstockalert.com, it's 100% free. You can go there, check stuff out. All kinds of cool investors and traders there. And like I said, it's 100% free. All we ask in return is you refer a friend. Tell somebody, anybody, to go check out perfectstockalert.com. They're insane, but they know their stuff. The disclaimer. Read it. God bless, guys. Made some good money this week. Enjoy your weekend. I'll see you all next week, starting Tuesday. Remember, it's a 3-day weekend.